So my name is Jeroen. I'm the director of the Blended Finance Task Force, which sits at Systemic, focusing on mobilizing capital into climate action investments in emerging markets. Some of the work that we did is around guarantees, for example, and other blended finance solutions. Most recently, some work on domestic capital mobilization and the actions that are needed to do that. That's in a way not the topic for today, because we have a very nice panel here to talk about finance for green hydrogen, with a focus on Namibia, but I guess we'll speak a little bit more broadly about the opportunities and challenges. So with us today we have Grant Miller from Zero. Welcome, thanks for joining us. We have Simon Nagelburn from Enertrack, Sebastian Suri from the Green from Climate Fund Managers, and Junaid Bellows-Raj from Mizuho Investors. Thank you all for joining. So we have a nice mix of project developers, investors, advisors. So I guess the perfect experience here in the room to talk about this topic. Just to sketch very quickly the context before I turn to my panelists. As we are all, I guess, quite aware, is that there's loads of opportunities in emerging markets to capture in the green transition. Emerging markets have around 95% of the top 100 countries in terms of global solar potential. Pretty much 60% of critical materials is in emerging markets. Things like copper, nickel, lithium, cobalt, that we all need for the transition. A lot of low-cost hydrogen and energy is going to be produced in emerging markets. So there is real potential there. With the right policies and financial regulation and some catalytic use of public capital, we should be able to capture those opportunities. But still we're sitting here and talking about what are the challenges, right? So I think in sort of the conversation that we just had was, let's talk about what are the challenges, but let's especially talk about how, with this room, and let's make it interactive. It's a small room, so we can make it a conversation. What are the actions that we need to implement in the next, let's say, 2 years, really, up to COP30, because we need to get ready for 2030, right? So we need to implement those actions. Hydrogen will play a very important role. As we all know, Namibia has launched its green hydrogen strategy, with specifying what needs to be built, where it needs to be built, and sort of the infrastructure that is needed for that, the shared infrastructure. Still, there is an economical as well as a finance question. So that includes things like offtake, the financial markets and regulatory frameworks that you need to do that, drawing in domestic but also international capital, given the sheer size of investments that we're talking about. Just to give one example, to build those mega projects, and I guess speaking to a crowd here that knows we really need billions, right, to build green hydrogen projects at the scale that is needed. And that is something that only a limited amount of companies in the world can actually do, right? So it's a really mega infrastructure project with a lot of gaybacks. So that's what we want to talk about today. How do we get those projects financed, both from the economic side as well as the finance side? What is needed to do that? How do we mobilize the amounts of capital that are needed? And what are some of the actions that we can, with this group together, how can we drive action going forward? So let me start with, I just want to start with a round across each of you for a couple of minutes to share some of your reflections on what you see as the challenges at the moment in Namibia and beyond to attract the amount of capital that are needed to build these mega projects. So Junaid, I'm going to start with you, and then we're just going to go across each of you.
One thing that, as an investment banker, has held through, continues to hold through today, is a phrase that I'm looking ahead before. Finance is not emotional, right? Capital, even in view of today's world where a lot of conversation is driven by energy security, technology development, and essentially sustainability, finance continues to be unemotional. It's just the nature of finance. Finance into large-scale projects I'll come down to green hydrogen in a moment in Namibia, but finance in large-scale projects will always require sponsors, i.e. developers that are credible, have a proven track record. Finance will always require a degree of understanding around local realities before finance flows into those kind of large-scale projects. Finance would always require certainty of offtake, whether in terms of a commodity, if it's a power project, whatever that major project is. Finance requires certainty of offtake. Finance requires some clear financial contracts, right, or financial structures to be in place. Debt equity cover ratios and a lot more. Finance also requires what I will call contractual agreements around things like technology providers, the OEMs or other equipment manufacturers, etc. All of these different ingredients makes for a bankable project. And if I come down to green hydrogen, and specifically to Namibia, I have to overlay on top of those 4 or 5 factors I mentioned, overlay the infrastructural gap that we have in country, and I think we can all speak. We want to get to a particular goal. We want to realize millions of tons of ammonia being produced in Namibia, some as a captive, in a captive way, for local industrialization and local use cases, but also in terms of merchant application as well, for export use cases. For that to happen, we need to realize that there is an infrastructure gap to underpin that scenario. But also, cost of capital is a significant gap that needs to be filled as well in a place like Namibia. We can go into the depths of those two in particular, but I don't want to hold the mic.
So this is the CFO of Enertra, which is correct, but I want to say as well that I'm representing Hyphen, so I'm a joint venture developing the gigawatt scale ammonia project in Namibia, where I'm the director. And so according to the question, what are the challenges? Some of them have been mentioned for sure. I want to even start one step ahead. So one step ahead is, let's say, the awareness as well. So here perhaps, between these people who are dealing with raising finance for infrastructure investments on a more or less daily basis, the awareness is clear. But the awareness needs to be raised for all people on the politician side, on the off-tech side, etc., that these amounts of capital can only be raised, as you mentioned, if the certain characteristics of business case certainty are achieved. First of all, why is it that important? People often say, oh, there's so much wind and so much resource, so for sure the cost of production is clear, but no, cost of capital is such a big contributor to the cost of production of the product in hydrogen or its derivatives. So 1% of cost of capital, so WACC, can increase the cost of the product by 8–9%. So this is the first very important thing, how to influence or the cost of financing, which can be reduced by more debt or by cheaper cost of debt and equity, where we need the business case certainty. It's very important, and then also we're talking about mega projects. And mega projects are then getting bigger, you have the infrastructural gap, so we're talking about huge amounts where many people need to be involved to make it happen. And you can often also go the easy way. Why do we need to make the big project? Why can we not do it step by step? And there are reasons for this. We have greenfield projects in places where up to now infrastructure investments have not happened in that amount. So there is no historic for how much Namibia, for example, has raised in billions of infrastructure investments. And then you can say, okay, let's go to another market where you already have the infrastructure, make the first step perhaps at a lower cost because you can build upon, but there are reasons why other locations are chosen. And these reasons are that in general, the cost can be lower for the product because you have more resource, you have land available, and the energy flows of the future of these products will change. So we shall all not be, let's say, too hesitant and avoid making this first step, because afterwards we say, okay, first step can be done somewhere else easier. The real cost of hydrogen on the long term can only be low if we really can raise the potential of many different places in the world. And those are for sure the ones with the most excellent resources. One of them is certainly Namibia, but for sure not the only one. There's 5, 6, 7 other regions as well. And that's not an issue. They are all placed at a lower cost of the curve of productions, and we need to make sure that they also can access to low cost of capital, because with these two combined, we can have a cheap project.
Hi, good morning everybody. Can you hear me at the back there? Yes, super. So thanks very much for the opportunity. Glad I could be on the panel today. Apologies from Alessandro Cassini who couldn't make it. So hopefully I will do justice. So and thank you to my panelists as well that gave such a great introduction. It's quite difficult to follow on from that. But I think in terms of Namibia, and to contextualize it, you know, in prepping for this panel, we actually had a look to see what was actually the largest project that Namibia had actually done. And what we saw was actually a national oil facility of about $300 million US. And I think that really speaks for itself, because when you're talking about mega projects in the context of Namibia, that is the largest project, and it was actually backed with the government's balance sheet. It wasn't a project financed project. So I think that's the first point that I think we would like to make zero, is that what we're looking at today dwarfs anything that we've ever done in the country. And so from I think one of the speakers earlier said that we've sort of identified between 8 and 10 green hydrogen projects. So if you take, you know, anything from 1 or 2 billion US up to 10 billion US, we're probably looking like about a 20 billion US spend in the country. So I think there's a lot of room for us to, and this is definitely not a criticism to the country. I think this is why we love the country so much, because of what it is. But the fact that there hasn't been this type of spend in the country is something that I think the banks and the lenders will certainly have to come in and actually have a look at and identify the risk and have a look at the risk to see whether that would whether they can actually lend, what is actually the risk, what is actually the risk to the country. So I think it's really the ticket. I think the fact that it hasn't been done before, and then also speaking to issues like offtake, credible, practical. You know, we hear about RFNBO, we hear about the delegation of experts, something that's practical and that works, and that you can speak to as a project developer. I think that those are some. There are some other challenges as well that are a little bit downstream, but maybe we can get in the next round. I can also get to something there. Thank you.
Thanks, Grant. All wise words, and actually the panelists also compliments. I think what we're also hearing, or in general, what we are hearing is what we're trying to do is pretty novel. It's pretty new, and it's pretty exciting. I think we should also recognize that Namibia offers an excellent platform to launch this exciting new journey from. You said finance is not emotional, perhaps not. I think the journey will be, but it's one we are all willing and looking to embark on. At least the people sitting on this panel, and I'm really excited by that. Climate fund managers, I think what we have done and why we like this so much is this is new terrain. This is frontier, and that doesn't work with bank finance from the get-go. It's not bankable, as people say. What we do is blended finance. We bring in donor capital, and we blend that in with commercial capital, equity that is, and then work together with the banks to get the projects bankable. But that donor capital is a crucial component to get there, and this is pure donor capital territory today, if you ask me, and then some brave commercial developers and investors that are taking a view to get there. So my view is on financing to make sure that we all encourage and facilitate a conducive environment from the public and the private point of view to crowd in donor capital, which will eventually crowd in that commercial capital. And in fact, what we are doing now, we have a dedicated chapter in Namibia, a dedicated fund that we have launched together with the EIF, with the ambition to raise $1 billion to invest in Namibia infra alone. And again, $1 billion sounds like a lot, but actually on these types of projects, there's a lot more to be raised. And this will all be blended capital, and I'm really excited about that. We're seeing quite some traction now from the Dutch government. And speaking to our other donor investors, which include the European Commission and the Green Climate Fund, to come in and start to unlock that foray of green hydrogen in Namibia. So my concluding remark is I'm quite excited by the prospect, and we started on the journey that is yet begun. But I'm pretty confident that we'll see some green hydrogen projects take off.
Big interest from many parties, from many countries, because they know they have the decarbonization paths, they have their goals, they have now tons of product volumes which they want to import at stage A or stage B. So they want to connect, make sure that they are setting good partnerships, and this is all the positive side. But to be at a step, we're talking about financing decisions and bigger investments and not the blended financing. It was mentioned in the, let's say, first development steps of where DFIs and other multilateral grants are involved. We're talking about raising also the big institutional private capital amount which you need afterwards. There you need for sure more than interest or any use. You need parties being able and willing to sign at a certain price and for a certain tenor. And there, a little bit like before about the cost of capital, the first thing also is transparency and awareness. So there's so much noise in the market about uninformed project costs. So you can still see people taking their slides from 3 years ago where the cost of debt was another cost of debt than we have today, where inflation was not there, etc., and say, okay, hydrogen costs €2 per kilogram, this is the benchmark. But so there's so much uninformed noise, so it's important to be transparent and differentiate which product costs are there, which people have really assessed. So there was a DD, for example, made by people who want to enter in a project as in Hyphen the case that the government has the option to invest in sustainability. That's what financial also comes. And when people look at business cases, and I think the resource cannot lie, you see there is optimal resource, so there's a certain cost, and others will not make it much, much cheaper. There's the infrastructure gap, and there's the gap of the price of the product compared to the grey or fossil price. And we should not deny it. We cannot find now people who say, I will only invest if the price is the same as the grey one. For sure, grey ammonia in the gas crisis 1 year ago was also 1,000 euro per ton, but it's not the case in a normal gas price environment. We will not go there quickly. So this aspect of making sure that people are willing and also able to make movements is only possible if you show them a clear path that the market rollout will happen. And you can do this via two things. You can say, now people say the European Union want to import X tons. So the volume and the time is clear. But it's not yet clear in which end consumer or industry market you will, which quotas, which penalties that people need to transform. You need to say, yes, I will buy X% of my input from the green quota. Otherwise, I do not fulfill my quota, or I do get a penalty. Or the alternative, that there are, let's say, off-takes, CFDs, or other, let's say, mechanisms like Globo or others which support off-take structures which can be bankable. And therefore, this gap is there, and we should not deny it and say the projects will only happen once there is no gap between the green product and the current fossil one. And this is for me very important that people make this decision, otherwise they will not see their volumes being imported in 2030. And therefore, a sort of blended approach to offtake will also happen, so that there needs to be support by the big offtake markets, either via quotas, penalties, etc., or via direct offtake agreements, CFDs, tenders, to make sure this border will be set up. Otherwise, as mentioned before, we will not be able to access these areas which need to raise the cost of capital to really produce at low cost, we need to.
Do you see projects like in Namibia producing at a price point where enough buyers are going to come in, or do we need different solutions to bridge some of that gap?
And come down. And I think that's where we want to be ready to accelerate and to actually get into the market. So our thinking is to try and optimize the right size, so between economies of scale, so not too big, but right economies of scale to actually drive the price down, and leverage and wait until the right entry point in terms of the cost of capital and your inflationary or your deflationary costs, but that starts coming down. I think when you're dropping a huge amount of money on a project like this, your entry point is absolutely critical. And that's going to, to a large extent, drive your pricing and your price signals. as well as your offtake. But you know, I want to close with this, or for this round at least. A friend of mine asked me, also an electrical engineer, quite a sharp guy, he said to me, "Brand, what do you think about green hydrogen? Do you think it's going to work?" And I said to him, you know what, if you'd asked me 20 years ago if I thought PV was going to work, I would have said to you, there's no way. It's unreliable, it's got degradation, it costs a lot of money, and if you look back at what happened with PV and where we are today, it's incredible. What the German government did for opening up the feed-in tariffs and supporting it. And I think that's, if we open up our minds a little bit and something like that can happen to developers and off-takers, I think that's what we really need and that's what we should be talking to. Because that's going to open up the market, that's going to drive prices down. Cost of electrolyzers is going to come down, cost of ammonia is going to come down. And that's where we need the world to go to. So it's going to take concerted and I think government and developers, finances are going to have to join hands, collaborate together. We don't see ourselves competing with other developers in the country because we think that the offtake is there. And so we see it about working together, developing credible projects that we can take forward, and that the governments can also see here are credible projects. We need to have the offtake agreements in place because these guys are working something good over there. So I'm very hopeful. I think there's a lot of work lying ahead of us together as a team. Thanks.
I think on offtake, these first projects, they'll probably heavily be leaning on long-term offtake, with price locked in, take or pay. This is what banks will be looking for. This is also how the first project in Saudi Arabia got financed. I think we are hopeful, obviously, and I'm sure the developers are, that a merchant component can come in there. But I do think that banks will be looking at that. I think there are two avenues, right? The first avenue is you'll have off-takers, large industrials that take a view. They are willing to pay the green premium today, right? That's what we saw in Saudi Arabia. There might be a couple of others coming up who just say, look, we're going to take a view, we're going to look in green ammonia for X amount of years for this price. We'll pay the premium. That's one route. I think the other route we discussed is a broader theme. It's not only cost of capital, if you ask me, it's cost. Cost is driven by capex, right? Will that come down? Probably electrolyzers will only come down if you start building them, right? You can't just hope for the best and the price comes down there. Renewable will come down, ongoing, because we are hearing more and more investment is flowing into renewables, and I'm confident it will. The third one is cost of capital, yes. Again, blended finance comes in. If you ask me, that's how you bring cost of capital down. But the last one will be, if you ask me, government support. This is Grant's answer, right? What did the German government do? They put in serious subsidy, right, to finance the first solar projects in Germany. That really propelled the solar sector. Full stop. What the US government is doing with their IRA is doing exactly the same. I think there are now sounds from Southeast Asia, from Japan and Korea, looking at contracts for difference. These are major movers, right? If they are going to sign CFDs and bridge that gap between the green premium and the current price of grey hydrogen, this will move the lever. I'm very hopeful, so to answer your question, that governments that are likely to be off-takers for these projects, which include Southeast Asia as well as Europe, will step up and will bring in these subsidy programs or some kind of guarantee program to bring down that price level. That will really move the lever, and I'm sure that will actually move the MOU into actually signing a long-term off-take.
I think I'm glad that we're all on the same page, just listening to the rest of them, in terms of what the issue is. Offtake always requires demand. You solve demand by solving the price. The issue that green ammonia, whether it's in Libya or even in Saudi, when we talked about people paying a premium for the Saudi example, was there really a payment or a premium by a sponsor? We could make all kinds of guesses and limitations, but there's enough in there to believe there was a high level of sovereign underwriting, even in that particular example. So how do we get to that point? How do we solve for the price of green ammonia? That is the question. Because in terms of demand, if if you look at the use cases, who's going to use this green ammonia? If you look at the use cases in that popular ladder, at the very top, in terms of immediate use cases for green ammonia, your fertilizer, I call it the chemistry use cases, so fertilizer, the shipping, steel, refining, those are displacements of 100 million tons of already existing dirty grey ammonia in the market. So the demand is there. But if you look at price parity and where we're at, just looking at numbers, right? Currently, you're looking at green ammonia, green hydrogen, somewhere around, let's say, $4.8 per kg. The grey hydrogen slash ammonia, you're looking at about 1.5 on average, and just paying a wide range of numbers. That's a big proof. Who's going to be paying $3.2 per kg, premium on green molecule? The way to get to that displacement is clearly the project sponsors looking at what it can do to reducing cost and bringing that number down. For all the projections, if you look at the ARENA report, to get to price parity with the grey ammonia today, electrolyzer cost has to come down 80%. Your renewables has to come down from $50 per megawatt hour down to about 20. Your electrolyzer efficiency needs to go up by from now 50, 60 to about 75%. Cost of capital needs to go all the way from double digits to single digits. But all of that will not happen in all of our permutations. That cannot happen within the next 5 to 10 years. We're looking at a 20-year period before we can, on its own, without subsidy, without public intervention, where we can have that price parity. So realistically, for us to actually get there, we come back down to these sovereign underwriting mechanisms, and that's where CFD comes into your question about CFD. The public side has to act in terms of not just subsidizing on the supply side, but also when it comes to implementing mandates. One thing that the Japanese have done well, obviously I represent a Japanese institution, is that Japan have looked at the concept of introducing ammonia into their power generation, right, in staggered measures, to go from 20% co-firing of ammonia all the way up to 100%. Now, those are mandates, right? And there are a number of other mandates that governments around the world could actually implement on the supply side to start to attract the demand that actually helps to bring us closer, right, to this. So we can't run away from the question of price parity. And to get there, I don't think any of the regions of the world can run away from sovereign underwriting. It then comes down to the big, right? The Saudis have got a deep pocket. There's no doubt about that. The US have got they're not allowed to call it the IRA in the UK, the IRA. And then you've got sovereign underwriting mechanisms in the EU and Japan. How does a green hydrogen project, such as HyFed project, how does that succeed without the deep pockets of a sovereign? So I think Namibia would have to be quite strategic in how it positions itself to gain from CFD programs that will be established innovatively in places like Japan and in places like Germany. And I think, and lastly I would say, innovation is going to be important. We have to start looking at how we are able to merge the conversation around carbon markets, social credits, carbon markets, into the conversation around funding on the supply side, funding these projects. For the first time in history, impact has been monetized. And I think that's something people have not yet fully come to grips with, but it's something that a country like Namibia, and in fact all of the supply side centers in Africa, have to be very quick to identify and to leverage. So impact has been monetized, i.e. your impact on the environment, there's also impact in terms of socials. And for the first time in history, we're seeing an asset class where people are paying billions of dollars to actually buy these credits. And if I'm in Namibia, if I'm in Africa, I should be promoting the use of these credits, essentially going a credit in a cost of capital challenged region like Africa should weigh more in terms of its value than a credit from a green hydrogen project here in the Middle East or elsewhere around the world. So these are mechanisms. We've got to be bold. We've got to be looking at innovation. We've got to be thinking about how we link up all of these different new streams that are coming up around the world. And at the end of the day, I think that's how Namibia's green hydrogen, steps up to the challenge of what a green hydrogen production does.
An audience in here. I guess there's some questions in the audience as well. I don't think we actually have a mic out there, so you just have to speak up a little bit, and I'll try to repeat. But any questions for the panel out of the audience?
Thanks a lot for coming out, guys. I think one of the things for me that is very useful from a governmental perspective is that some of these assets are going to end up being cross-border, and they're going to end up being strategic on a cross-border level. So in Namibia's case, we're looking at transmission lines into South Africa possibly, we're looking at hydrogen pipelines into South Africa, but we're also looking at building green maritime corridors. Now, that's not necessarily hard infrastructure, but it's soft infrastructure, it's policy that we're going to have to be agreeing with our partners either in Europe, in Japan, and elsewhere. So I'd love to ask the panel a little bit more about how governments, not just in Namibia, but regionally and globally, can move together to lower the cost of capital further. Because I do suspect that, yes, there's the offtake support mechanisms, but I know Honorable Wendo is here working on certification as well, right? And that, when there's more clarity and certainty about the molecule, it might help reduce sort of the risk and mobilize capital. So I'd love to hear from the developers what they want government to do more, not just focusing on Namibia, but really regionally and globally as well.
For sure, not easy to ask, but there are many things which can be done. So perhaps you talked about the infrastructure, and this often comes then at the beginning of a sort of energy partnership, and people define on the mid to long term where do we want energy flows to come from. What aspects are contributing there? And I think Namibia has really much to offer there. So Namibia is a very stable partner, is a democratic partner, is a partner where the impact of building up an industry on the whole country is huge. So many things which can be offered, which shall be valued by, let's say, the importing regions. And I think this needs to be made clear that this change of the current fossil energy product to a new product is also a change where you can look at how do we want to redefine the world. And as I said again before, there can be other projects or countries which currently have a comparative advantage because of cost of capital or existing infrastructure, but not because of the pure physical resource cost of the product itself on the mid to long term. And if we don't start right now, you will not start in 10 years when you will build up the infrastructure somewhere else. So it's important to think about mid to long term partnerships and include this. And since we're here for the financing panel, I want to also again raise the point of cost of capital from a, let's say, regulatory perspective. Not only of the government, also of many other funds, etc. So what do investment criteria are looking like often? How much OECD or non-OECD investment do I have in my bucket allowed, and all this? So this does not change over time. So we often have people who say, at the highest level we want it, at the operation level we want it as well, but when looking at our framework in which we are able to act in, we don't have something where this product fits in. Oh, and you were always talking about the country risk, so that is something which also needs to change. If a product is coming from a project which has many risk factors, we talked about here today about technology, about offtake, about uncertainty, about development. We did talk less about expropriation and country risk, but in the end, what is the mechanism people and also ECAs and all premium are defined by? They look at first, where's the project? That's the country risk, that's the base cost of capital or fee theory. And then you add project costs. But you need to change it. You need to look at a project from different aspects, and for sure country risk is one of them, but it's not the base. Then maybe you can never compete. You always add it from the current costs of the country risk, the budget, etc. So this needs to change, and therefore it's also important that this from a regulatory perspective and also from different investment vehicles is seen with much in advance. You need to change this criteria of how much dedicated funds you have, but also the other investment vehicles, how much are they willing to invest in this space. The good thing on this is we're seeing this happening already. So we're invited, for example, by, Germany, by our Ministry of Economy together with Euler Hermes to discuss what criteria you're using for. And when you go into more detail, you see the current ECA rules don't apply well, etc. And you see what needs to be changed. So people are start of changing, is exchanging, communicating, they're starting to think about ideas, but this needs some steps.
More practical level. As soon as you start engaging off-takers, they want to start seeing your project concept, they want to start seeing your development documents, where's your permitting, where's your title, where's the access to land. Title and access are key to what the developers would actually look for. So, although there's a restriction in terms of the interest rate and inflation where we are at the moment, I really do think that we need to accelerate the development of our projects so that when the environment is right, we can actually pull the trigger. We know that there's certain limits in Germany in terms of carbon emissions, but that's not that far away. So when the government does decide that, okay, here are the mechanisms, here's your pricing, here's your CFDs, that you can actually have a project that you can pull the trigger on. And so talking a little bit more, maybe a little more practically, I think, and maybe as a recommendation to James, maybe a couple of points for considerations, looking for easier permitting, but if you look at what South Africa have done in terms of the SIP, the SIP is in place so that you complete the permitting. The permitting is done according to the regulations, but if you're a SIP project, your project goes to the top of the pile, not to the bottom of the pile, because it's considered a strategic project. So I think there's certain steps like that we can do as a team, working together to say, let's look at the permitting, let's look at the processes to access land as well, because there's certain restrictions on foreign entities to own land in Namibia. So that would be the one thing. And then certainly a practical thing that we're looking at is EPLs. How do we manage those? Because that would also be a bankability issue that the banks would raise. So I think we're happy to sit with, we are engaging government, we're happy to sit with government and work together and say, these I think are our sticky points that we have. I'm sure that there's going to be, these are sticky points with other developers as well. Is there a way that we can, within the legislation and regulations, actually try and expedite on these couple of points to bring the project to a state where we're ready to actually talk seriously with offtake and ready to pull that trigger on FC. So,
to end the panel with a round across the four of you, and it would be great to, if there was one thing that we should do together with this group in the next, let's say, 6 to 9 months, what would the one thing be to accelerate green hydrogen projects in Namibia?
Press on. I think we're doing exactly what we should be doing. Like, you won't get to bankability if you don't progress. So we need to respect what Zero and Hyphen are doing. And we need to support them in their endeavors by providing funding and support from a public and private side to make sure that they get through their feasibility studies and prove that there's actually a concept here that might work. Not might work, it will work. So, yeah, that one thing is press on, continue as we are, and keep on pushing.
Yeah, I mean, if there's one word for me, it's positioning. I think it's, and if you say in the short term, what Namibia and this group should look to do is position. Position yourselves strategically on the public side with other governments. Position yourselves strategically in terms of offtake mechanisms, in terms of CFD. Position yourself with, especially working with the sponsors, in terms of sponsors working together to pool the amounts of capital. So for me, the ones who will win in 5 years' time, in the 2030s, are the ones who position themselves today. So positioning is key.
I try to combine it because, progressing and positioning, and I would say this without being afraid of the next step and with priorities, because we cannot do it all at the same time. So there are also in this group limited resources, we have ideas and projects, so we need to look at the priorities, how can we unlock financing for projects in the early phase and next phase, and which are the big steps to progress and to go ahead and not to look back, but look at what we need to fulfill the targets of 2030.
it's very difficult to add on after all of that. But yeah, I think that we, as developers in Namibia, are not competing against each other. I think we're competing against the rest of the world. So I think it's about collaboration together to see how we can unlock the different obstacles that we're facing to accelerate this. And so I would really say probably we need to collaborate. We're all facing certain issues. Some are mutually exclusive, but I think there's a large amount of issues that we can actually figure out together and work together on. And I think if we can do something like that, that everybody and most importantly, Namibia will benefit. So thanks very much.
Amazing, and thanks to the panel, it feels like we have some practical ways to move forward and a very strong goal to collaborate with everyone in this room, and I think we're hearing it everywhere, and it's great that we're all together here and move the conversation forward. Some work to be done around offtake. I think that's going to be feels like the crucial factor at the moment, and how do we bridge the gap between the price points of existing hydrogen and the prices that we see now to make sure that we create something that happens with solar PV in terms of driving down the technology costs. We know they're going to come down once we start building and scale, but we need to start building and scale for them to come down. So let's try and solve that gap, because that feels like it should be solvable, and we just need to do it to reach these targets that we've set. Please give a hand to my great panel. Thank you very much. Thank you all for being here, and let's continue the conversation.